Welcome in this video. Xcn coin price is preparing the infrastructure. We will analyze it. Don't forget to subscribe and like, and please watch to the end to understand. When we carefully examine the chart, we can clearly see the presence of a descending trend structure, especially in the short and medium term. Looking at the price movements, it's evident that this descending trend line has been tested several times, and on some occasions, small reactions were observed when the price approached these levels. However, despite these touches, the price has not yet managed to break this trend line decisively to the upside or remain above it. It's also worth noting that this descending trend line appears to act as a psychological resistance level. Every time the price nears that zone, sellers step in and push it back down. This indicates that the market is still under pressure, investors are cautious, and aggressive buying isn't happening without a clear breakout. But we also know that such pressure doesn't last forever. In trends like this, each touch tends to slightly wear down the strength of the sellers, eventually leading to a strong breakout. This is exactly where the critical scenario comes into play. If the price manages to break this descending trend line decisively, not just with a wick, but with a candle close and a move supported by strong volume, it would be a very strong signal that the market structure is changing. Furthermore, if the price then pulls back to retest the broken trend line and finds support there, it would be extremely important. Such retests confirm that the breakout is not false, and that the old resistance level has now turned into a new support zone. A successful retest followed by a rebound in price would clearly show that buyers are gaining confidence in the market and that sellers are losing control. In short, both a breakout from the descending trend and a subsequent retest would be strong signs that the price is preparing to move upward. These types of trend breakouts also have a major psychological impact on investors. Many traders gain confidence and enter the market more aggressively after seeing a successful breakout and retest. This can trigger larger price movements, especially with rising volume. If a retest is successful and followed by a high-volume move upward, it is quite likely that the price will start testing nearby resistance levels. In particular, previous peak levels may become initial targets. And if these zones are broken, the upward momentum can significantly strengthen. Additionally, in technical analysis, it's often the case that after a trend breakout, the price has the potential to move by the same distance as the original trend move. That means the downward move from the start of this descending trend could be mirrored upward after a breakout. That's why the current setup marks a highly critical phase that should be closely monitored. Whether the price breaks this descending trend line, whether it performs a retest, and whether there is volume support during this process, are all key factors that will largely determine the direction of price movements in the upcoming period. Therefore, for investors, being patient and waiting for a confirmed breakout and retest is a much healthier strategy at this point. Jumping into trades without confirmation usually leads to traps or unnecessary losses. But with a patient approach and well-timed moves following solid signals, highly profitable opportunities could arise. Still, it's important to remember that analyzing just the trends isn't enough. Other metrics must also be considered. Stay tuned. When we carefully examine the chart, it's clear that the price is currently at a very critical stage within the context of the Elliott wave theory. Initially, the price formed the first wave with a strong and dynamic movement. This first wave is interpreted as the beginning of a new trend in the market, and it is generally accepted that during this wave, major players, also known as smart money, enter the market. Therefore, the completion of the first wave provides an important signal that the trend is developing in an upward direction in the medium to long term. The current state of the price indicates that the second wave is in the process of forming. According to Elliott wave theory, the second wave is a corrective phase following the rise of the first wave, during which the market takes a breather and participants engage in profit-taking. This period is often filled with a sense of uncertainty and fear in the market, as those who missed the initial move up start to wonder, is this a selling opportunity? However, those with technical analysis knowledge understand that the second wave should never fall below the starting point of the first wave. Within this framework, the size of the pullback helps us determine whether we are seeing a healthy correction or the breakdown of the trend. Currently, the price is moving toward the ideal retracement targets of the second wave. The Fibonacci, 0,618 and 0,786 levels. Fibonacci analysis is used to determine support and resistance levels with great precision due to its inherent nature. The 0,618 level, known as the golden ratio, is expected to generate strong buying interest. The 0,786 level, on the other hand, is considered the last line of defense, where buyers make a final effort to push the price back up. As seen on the chart, the price is now trading quite close to these two significant support levels. If these areas are reached, it is expected that strong buying pressure will emerge and create the groundwork for the beginning of the third wave. According to Elliott wave theory, third waves are typically the longest, fastest, and most high-volume moves in the market. In other words, the real profit opportunity for investors appears during the third wave. Moreover, the approach of the price to these Fibonacci support levels is highly significant, not only technically, but also psychologically. Many investors and algorithmic systems closely monitor these levels. Therefore, volatility may increase and sudden moves may occur when the price reaches this area. If the price forms a solid bottom here, consolidates with a few horizontal closes, and then shows a strong breakout supported by volume, the start of the third wave can be clearly confirmed. At this stage, the most important strategy is to be patient and wait for strong signs that a base is formed at the 0,618 or 0,786 levels. Once the third wave begins, the move is expected to be very fast, and getting on board in time is crucial. If one is late, the risk-reward ratio can deteriorate significantly, and good entry opportunities may be missed. In conclusion, after forming a strong first wave, the price is currently undergoing a healthy second wave correction. The Fibonacci 0,618 and 0,786 levels stand out as possible termination points for this correction. If the price makes a strong reversal from these zones, and momentum indicators begin to generate upward signals, the third wave move may begin. The potential targets for the third wave are generally around 1,618 times the length of the first wave or even higher, indicating a highly satisfying upward potential from the current levels. Therefore, it is critically important to closely monitor the current price action and any potential reversal signals. And after the second wave comes the third wave. The third wave comes suddenly, and everyone is left surprised by what just happened. When we look at the RSI indicator from a broader perspective, we can clearly observe that it is currently moving within a very distinct downward trend. The continuation of this downward movement in the RSI continues to put pressure on the price as well. Since RSI often gives signals ahead of price movements in technical analysis, it doesn't seem likely for the price to break its own downward trend as long as the descending trend in the RSI remains unbroken. Therefore, the downward trend that is formed on the RSI is of critical importance. If the RSI breaks this descending trend line to the upside with strong volume, it could indicate that buyers are gaining strength and that the price is becoming more willing to break its own downward trend. In other words, a trend breakout on the RSI would act as a leading signal for potential price movements. A particularly important point to pay attention to is whether the RSI begins to move up from the oversold region while breaking this descending trend. In such a scenario, we can say that momentum is recovering and that the probability of the price starting a healthier upward move increases. For this reason, the descending trend line drawn on the RSI currently stands out as one of the most important elements to watch in technical analysis. If the RSI can break this descending structure and maintain its position above it, the likelihood of the price breaking its own downtrend and transitioning into a new uptrend becomes quite high. However, if the RSI fails to break this trend and starts moving downward again, this could lead to continued pressure on the price, pushing it toward lower levels. That's why both the trend lines on the RSI and the price should be monitored very carefully. If both break their respective trends at the same time, it could signal the beginning of a strong trend reversal in the market. Right now, the movements on the RSI are giving us some signals that a breakout may be near. However, making a definitive judgment without a clear confirmation could be risky. Therefore, it is very important to patiently observe how the trend lines on both the RSI and the price chart behave. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.